Welcome back. In this video, I'm going to be reviewing Robinhood stock. This company released their earnings for the third quarter about a week ago, and I have a fresh set of financial statements to take a look at and update my valuation of Robinhood. Overall, I think Robinhood is a really interesting company. They really are changing the way that investment is done in the marketplace. We can thank them for the zero cost trades, which was an innovation they had. They're doing other interesting things, and overall, they continue to grow. I really like their creativity, and I like that they continue to really obsess on their customer, which is the younger investor. I'm going to be evaluating Robinhood, taking them through my process, and making a decision whether I should buy more shares of Robinhood, hold the shares I already own, or sell my shares. Do me a favor and like my video and subscribe to my channel, and please provide a comment on Robinhood. Let me know what you think of Robinhood. Now let's get into my process and evaluate Robinhood. Now, I have a consistent process of evaluating stocks, and it involves four key questions followed by a decision to buy, hold, or sell. The first question really is, do I really like the company? Do I believe in the company? Do I think they're doing something innovative and special? And do I want to be part of the industry? Do I believe the management team is doing a really good job operating the company? Is debt under control and less than 3 times EBITDA? And am I getting a discount on stock? I want a discount on the stock. And based on the answers to those questions, I will buy, hold, or sell this stock. So Robinhood doesn't follow the same rules as traditional investing companies. They really write their own rules. They really obsess on their customer, which is the younger investor, the investor that grew up with an iPhone in their hands or a smartphone in their hands and really expects to have information at the palm of their hands. They also want a user interface that resembles other things that they've been doing for a long time. That obsession of the customer and carving out a space within the marketplace really separates Robinhood from the other brokerages. They're not going after Fidelity or other firms that have been around and are really catering to that older investor. No, they're going where I think the Fidelities of the world struggle to attract the younger investor. They just don't get the investor, and the investors don't get Fidelity, the younger investors. But Robinhood is really capturing that part of the market. That part of market is not going to be young forever. As they continue to get older, get promotions at work, make more money, they're going to invest more money. So they're going to continue to bring more sums of money and investment over to the Robinhood platform. And I think that's going to really fuel long-term growth for Robinhood. What's also going to fuel growth for Robinhood is that they continue to take market conditions and make products that make sense for that period. They have a high yield savings account now. They're doing a lot of things based on the market conditions that really help them attract and keep their customers. Overall, I think their management team is doing a great job. They're creative and continue to roll with the punches and continue to try to grow the company. Now, Robinhood's average revenue per user has gone up. Now, it's not a linear, a perfect line going up, but if you look at where they were in 2021 to where they are today, the ARPU has really gone up nicely. So they're making more money out of each customer they have, each user. That's really good to see. And again, they continue to be creative. It's not necessarily, one thing worked 2-3 years ago and they just stayed on it. The things that were happening 2-3 years ago when interest rates were really low, the environment's quite different. So I really like that Robinhood is not letting the market defeat them. They're adjusting to the market, taking conditions, and making new products that really fit that particular time. So Robinhood announced their earnings on November 7th, and the stock really went down, primarily because their transaction-based revenue went down 11%. So that really scared the market. And that is a concern, quite frankly. Now, the other thing that reduced is cryptocurrencies. They've been kind of on a rally, but for some reason, the amount of revenue that Robinhood's getting out of crypto also went down, which is a surprise. On the positive side, net interest revenues really skyrocketed. And that's because Robinhood holds a lot of cash on their balance sheet. So they can do a lot of things with cash in a high yield environment where they can invest in high yield bonds and other income producing instruments. Their loss from operations did shrink, so they're on their path to being profitable. I really did like that about their earnings. Looking at the income statement, in the quarter, the third quarter, revenues actually went up if you compared Q3 of 2023 versus Q3 of 2022. As mentioned, transaction-based revenues did go down 11%, and that was disturbing to a lot of stockholders, and the stock was sold off. The net interest revenues did go up substantially. They almost doubled. So that really enabled them to grow their revenues overall. And then they had other revenues as well go up 24%, which is a small number, but it was good to see it grow. If you look at the costs have been managed well, and their overall loss in the quarter was substantially lower than last year. So it's good to see that they constantly are moving toward profitability. Robinhood has a lot of cash on their balance sheet. They have over $8 billion of cash on their balance sheet, and they have no debt. That's a real strength, is having a balance sheet where they can grow the business, they can start new ideas, they can really fuel the growth of the company without having debt over their heads. They don't have to pay big, interest rate bills and so forth on their debt. Instead, they're earning income on their cash, and they have that cash ready to deploy and grow the business. Looking at the statement of cash flows in the quarter, the amount of cash that was produced out of operations did go down significantly. They're still doing well year to date. For the first 9 months of their year, they've generated $221 million of cash from operations, which is good to see. And they don't have to put too much money back into the business, because this is a intellectual property idea business. It's not like they have to, buy a giant factory, operate with a lot of capital. So they have positive free cash flow that I'm going to use in my valuation of Robinhood. So I believe that Robinhood is discounted by 43%. And I get to that number by looking at the company's free cash flows. Let me take you through that. My estimate that this year they're going to produce $275 million of free cash flow, and that's using the first 3 quarters of 2023 and then annualizing that number to get to 275. I'm going to grow cash quite fast, because they are growing and they are, going toward profitability. They're generating more free cash every year. So growing at 25%. And then after year 4, just growing at 4% to establish terminal value. I'm going to discount all those free cash flows that I expect in the future by 11%, which is a high weighted average cost of capital, because Robinhood's a new company. It's a young company. So I want to make sure that I'm applying enough risk in this evaluation. Based on an 11% discount rate, I think that all those free cash flows are worth $5.9 billion. I'm going to add the cash that's on the balance sheet, and they have no debt. So I get to an equity value of $10.8 billion of value in Robinhood. Their market cap right now is $7.5 billion. And really what that translates into is, I believe Robinhood is worth $11.86 per share, but the market will sell you shares for $8.31, which really gives you a nice discount of 43%. Looking at where the stock is traded over the last year, you can see that it had a really nice run up going in the summertime. It really went up nicely, but then it really went down. Year to date, it's up almost 3%, which is behind the S&P. But it's really offered up, really good acquisition zones. And right now, as mentioned, that there's a 43% discount. So it offers up a pretty good upside potential. And what I always remind myself is that Robinhood continues to be really dynamic, and their ideas work. So if they continue to get on a roll and really start growing, their valuation is really going to change. If the growth rates change, they're going to be worth more. If they generate more free cash flow, they're going to be worth more. So let me evaluate Robinhood and make a decision to buy, hold, or sell. I think the company is different. And within the space they're really trying to own, they're doing a very good job. I like that about Robinhood. And I think their management team's doing a really good job. As mentioned, they have no debt and a lot of cash. So I like their balance sheet, and they offer a nice discount on their stock. So I'm going to continue to buy shares in Robinhood. Thank you for watching the video on Robinhood. I hope you found it interesting. Robinhood is an interesting company, but I don't think they're going to follow a straight line up. I think it's going to be, a wavy line going up and down. And until they really are a good market share owner in the space that they want, that's when I think their valuation is really going to take off. It'd be nice to see them succeed and be an owner in their shares. So it's good to be an owner of shares, and I'll be adding. I think I'll be careful not to add too many shares because I don't want to own too much Robinhood. It's a little bit too risky to own a big position in this company. So again, thanks for watching. Do me a favor and like my video and subscribe to my channel, and please leave a comment on Robinhood.